Ladies and gentlemen, welcome back to the channel and another very volatile day here on Wall Street. Unfortunately, something is different with this video. We do not have the camera here today. I am not in the studio and did not bring the camera, unfortunately. But nevertheless, there's a lot we can't wait to talk about. So we have to talk about what is going on today because we got the jobs report. We got a very volatile market. The S&P 500 was up over 2% at one point today, and now you are fighting with going negative by the close here today, and we are almost into the close, but things can move around a lot. We are seeing 1 minute candles moving the markets up or down 0.25%. Typically that does not happen, and you are seeing that happening here today. And next week, you have some very important things going on as well that could also feed us into a downward move or an upside move. But without further ado, let's talk about AMC, go over the data, kind of talk about what's going on today, give you guys the broad scoop if you live under a rock or you're just needing the information. Guys, let's get straight into it. So first things first, the jobs report is the thing that is really moving the markets today. And as you guys can see, the NASDAQ is down about 0.5%, continuing on this very bad week that we have been seeing. It has been terrible. I think we've dropped 5.5% this week alone. So you're definitely seeing one of the worst weeks of 2022 by far. Nonetheless, here's where the jobs are for October 2022 in one chart. The healthcare and social assistance sector enjoyed strong gains, gaining 71,100 jobs last month. Manufacturing posted a strong month after adding 32,000 jobs, boosted by increases in the durable goods industry. Now, with all of the news of layoffs and pausing of hiring, I'm just kind of blown away, to be honest, where these jobs are coming from. Like retail trade up 7,200 jobs, transportation plus warehousing 8,200 jobs, manufacturing 32,000 jobs, professional business services 39,000 jobs, healthcare 71,000 jobs, construction 1,000 jobs. Who the hell knows where these jobs are coming from? It's not the point. The markets, they did not like the underlying number of how many jobs were created. And I believe it was over 260,000 jobs during this report. So that was definitely not a positive thing. But what was a positive thing is the unemployment rate actually did go up just a little bit. The unemployment rate did go to 3.7%. That is better than the estimated 3.6% unemployment rate that we were expecting to see. So a little bit of good and bad, because the unemployment rate was higher, so that is good, but we missed on the actual jobs number. So that's where you kind of got the weird dynamic in the markets today, where it's a little bit bullish, little bit bearish, and it's not clear cut a negative or positive thing here today, and that's why you're seeing a lot of that volatility. Now, you are seeing Fed officials Barkin and Collins see the possibility for slower rate hikes ahead, but this is the biggest story out of the Fed meeting. Yes, smaller rate hikes to come, but we're gonna have to go higher and stay there for longer, which does very much drastically increase the probabilities for a recession. It says regional Fed presidents Thomas Barkin and Susan Collins both indicated Friday they think more interest rate increases are needed, but maybe at not such an aggressive pace. Quote, I think the implication for this is probably a slower pace of increases, a longer pace of increases, and a potentially higher point, Barkin told CNBC. Collins said the Fed needs to examine the risk of over-tightening against stopping too early in the fight against inflation. And this is, like I said, again, not a positive thing, but in regards to AMC and specifically with that trade, we know the longer the Fed raises rates, the longer they keep rates in a very restrictive level in which we are at right now, the greater probability of a recession. Like Fed Jerome Powell said, the window is narrowing for a soft landing, and he basically sounded defeated at the press conference. And what that really means is you probably have more pain to go in the stock market, and valuations have to come down even more for the S&P 500. That's not even to mention if earnings fall. So if earnings actually fall, or people start to expect earnings to fall in 2023 due to a recession or due to whatever reason it is, the multiples have to come down even more, and that puts your risk of a downside move much more aggressively. For an example here, if the S&P 500 just went to 390 to 400, that's only $20 away to the upside right now. That would be considered a pretty richly valued market if earnings just stayed the same and the federal funds rate was at 5%. Now, if earnings decrease next year and say we're at $210 of EPS for, that stands for earnings per share if you guys don't know, for the S&P 500, then 390, that's very overvalued at that point with the federal funds rate at 5%. So hopefully you guys are catching this drift by now. That it potentially is a very positive thing for AMC. If you do get shorts that really start to get offsides in the broad markets, what I mean by that is if you start to see stocks going down in a very big way and hedge funds don't have enough shorts to cover those losses, which they typically don't, and then you get any kind of positive news out of AMC, banks, people that are holding those basically those margin loans for hedge funds, they're going to want more collateral. And when it's hard for hedge funds to get more collateral, when their stock prices have went down and banks are discounting the actual value, the notional value of those securities or whatever instrument they're using for collateral, bonds or stocks, very volatile instruments typically, well, that means that they have to put even more up. And it's really a self-fulfilling prophecy that starts to get shorts to cover first at a slow pace. And then once you really start to see the stock really balloon from there, that's when the question is, how long can we stay in our short position, or can we stay in our short position? Do we have to cover now in order to protect the firm? And I do think that is really what is coming over the near term horizon over the next couple of months if the markets do make that next leg down. Now, here today on a positive note, the probability for a 50 basis point rate hike is now at 56.8%. This is completely flipped yet again from yesterday. The markets don't know where to price anything as of right now. It's really going back and forth. We're going to have to get the CPI report coming next week. We're going to have to get a couple other data points before the markets are really willing to bet a lot of money on 50 or 75. But at this point, the Fed's going to do whatever the markets are pricing in, so you guys definitely want to watch that. And 75 basis points could fuel more downside from here. But keep in mind, December, you get a new summary of economic projections. So the Fed's going to come out. They've already said at the press conference, and they're going to raise the terminal rate where they want to get the federal funds rate and keep it. It's probably going to be 5.5, potentially even as high as 6% to try to stamp out this inflation. And at that point, who even knows if that's going to work? All of that is going to mean more downside in the markets. It's going to mean a harder time for the shorts when AMC gets some good news. And I think AMC will get some good news over the next couple of weeks. We know that on November 11th, you have the Black Panther film coming out. That's expected to be a major blockbuster film. And then December 16th, you also have Avatar 2. So I think it's no surprise that you're going to get some very good numbers out of them. And considering AMC is continuing to take market share in the movie theater industry, I think that alone is a very predictable positive headline that we could be seeing that could spark some very real enthusiasm around AMC, especially as the price of the stock has continued to fall. As you guys can see, the price of AMC down 3.77% on the day. That is not bad. We're sitting at $5.49, and it's not bad relative to what has happened with some other stocks as well. Even look at Apple, worth more than Google, Amazon, and Facebook put together, is down 2.65% today, really in a risk-off kind of sell-off. AMC down just a little bit more than that is a positive thing. Now, another big story of today, which is really helping to keep the markets up, guys, is the dollar. UUP. This is the way to track it, and it's down 1.58%. When the dollar goes up, it's a negative thing. Hopefully we understand why by now, but if you don't, essentially Apple, 55% of their revenues are in foreign currencies. When the dollar goes up, that means their foreign currencies are going to convert to a lot less dollars because the dollar is expensive relative to global currencies. So it fundamentally hurts company earnings when they have to report earnings in dollars. Now, it's down 1.5% today. So that's a positive thing, but it's still very, very high. And I think this is helping to somewhat support the markets here today and give us a little bit of that positive skew to things. Believe it or not, the SPY is pretty neutral on the day. Just some growth stocks are really underperforming the markets. Now, let's go ahead and take a look at AMC, take a look at the short interest, all of that good stuff. And we could see, go ahead, click on the live short interest, that the live short interest sits at 19.98%, so pretty much 20%. And you do have about 103 million shares that are sold short with a cost to borrow max of 18.8%, cost to borrow average of 18%, and cost to borrow minimum at 16.65%. It looks like the cost to borrow right here today is around the minimum at about 16.5%, which is still, in the grand scope of things, very, very high. Now, you do have about $600 million worth of shorted shares still on AMC, and the free float out on loan is sitting at about 35%. Shares out on loan sitting at about 180 million, days to cover almost at 5, and you're still at 100% share utilization. And as far as option activity, you have seen one positive order for about $21,000, obviously 100% positive order value, and it is a November 11th 550 call for $21,000 right there. So not necessarily enough data to give us a positive or negative prediction from hedge funds, but as of right now, the data is looking very, very good with AMC stock. And as long as we can get something positive, guys, any kind of positive data point, I think right now, given where liquidity levels are, you could see a very, very big move based off of that alone. But the big story of the day is the jobs report, which is quite neutral, Fed comments, as well as the falling dollar. So let me know down below in the comment section what you guys think of all of this information. What are you guys watching today? What do you think about AMC? How are you positioning for potentially another big rally with AMC? Let me know that information down below in the comment section. Thank you guys for watching. I will see you in the next one.